Hello, Andrew Faldy here, and I'm going to show you VXX using a momentum signal on the short side of the market. So if you are like many traders in the world and you have a bearish bias on the market, and whether that's a temporary thing or a permanent part of your psyche, as tends to be the case for active traders, I have good news for you. There is a way that you can have some upside exposure to the market, have a solid edge, and still maintain your bearish bias in equities if that's what you prefer to do. If you have an edge there, if you're a bearish butterfly trader as an options trader, that's actually a very solid edge for many types of market conditions. But sometimes we need some upside exposure to the market, something systematic to give us a benefit on the upside if that's the way the market chooses to run. So I've done a lot of studies in the past, and this week, Wednesday, let me just check the date exactly, tomorrow. So tomorrow, I'm not sure when this video is going to come out, but on May 11th and the 2nd and 4th Wednesday actually of every month at this point, we're doing systems testing workshops, and I'm going to be sharing this one as well, and that is the VXX and also the UVXY. And any way you slice and dice these instruments, they have a solid downside edge to them, and we're not going to get into exactly why that is. We just need to know that embedded inside of them is an edge, and there's lots of edges like this in the market, and this is one that has a correlation to when the market goes up or when the market is calm. These have a negative drift, VXX and UVXY. So when we look at these, we can put on a lot of different strategies, and I've got this code written up, and I've been trying all kinds of different stuff in here just to see which really has the best edge, which of them is frequent enough that I can control risk, but also lets winners run. I've tried to exit at the end of the day. So far, everything I've tried is better if you just hold the trend, because sometimes this thing can really get moving in the right direction, and just closing the position and reopening every day just adds costs more than the benefit of avoiding overnight risk. Also, I'm looking at this where I'm going to take these signals and convert them to options trades. If I can slow them down enough and get enough edge in them, then I can signalize them, gray box, then take them to the options market and define my risk that way as well. And I have been trading UVXY with options just to get a little extra benefit out of it. So this current signal I have running, this is the equity curve, and this looks great. We've got a lot of time in this, so anytime you add more time to a backtest, the drawdowns can really hide themselves. So it seems like, oh, there's just this little kind of dip here, but you don't realize that that actually is a, let's see, 5 of 11 through 9 of 11. I mean, that's a 4-month sideways to drawdown kind of period. So we got to not ignore those in these types of tests when we're going back a long distance. So, but we can see that decent expectancy, 1.72 on this one. And this is VXX, $100,000 position just for quick math. So ends up at 604 theoretical, historical, simulated profits, of course, as we always are demonstrating in backtesting. But $600,000 profit on a $100,000 position size since the beginning of 2009, not bad. However, we got some drawdown issues when we're just using this simple of a signal. Let me find it here. 38%. That's too high. Just honestly, that is too high of a drawdown for a system. Now, if you take that as a small portion of multiple things that you do, and you have, like I started out this video saying, maybe a bearish bias or maybe a bearish system that has its own risk controls when the market goes up, this becomes a good offsetting trade. It's kind of, you could call it a hedge. I like to call it a pair or a strategic portfolio, a strategy-based portfolio, not as far as the traditional term portfolio, which would mean to just own many different things. We're not owning this, we're trading it. It's a system and a strategy that has risk controls in it, but we treat it like a component of a strategy portfolio. So you can add this to your portfolio. And just so you know what this is, I'm not keeping any secrets here, and it's I don't even think it's production worthy at this point, but just to share where we're currently at. This is really simple. Just closing below an average. That's all it is. Moving average. I have a long short, but I'm only looking at the short at this point. And it came out at 10. Very simply, a 10 moving average. If it gets below a 10 moving average, it gets short. Now this is far different than many times we talk about short-term moving averages, and I've discussed in trading conversations as well as the systems testing workshops that very short-term moving averages are best for mean reversion. Now that difference is that is on daily charts and that is on equities. This is a beast of its own. So you could be looking at conditions where equities or the broad market are extended above short-term moving averages and call that a bearish bias, using either options to control your risk and add premium decay, or some other type of way of adding an edge to that bias, that mean reversion to the downside bias, but then coupling that with this momentum short in VXX, which is actually a bullish trade. Putting those two together, then more likely than not, you're going to have some kind of one of those working where the other one might be. So as an example, just from today, you might think that, let me go back to SPY. We're going to be loading a lot of data, so that's probably going to take too long. All right. I'll just pause it so we can load that. So you say we're getting to this resistance point, or you see, okay, this one, maybe this is a good downtrend, and we're looking for maybe another leg down, and then we get a gap up. You say, well, now we're approaching this level, looking for another leg down. It just keeps going and going up, and it's fine to have a bearish bias on a rally in an index. And that's just a reasonable way to trade. But if you want to add some other type of pairing to that, you can see you go to UVXY, which has accelerated, actually taking out these all the way back to 419, actually making new lows since then in 428. Again, compared to SPY, it should load more quickly because I've already loaded it once now. You can see we're not even approaching those levels yet. Coming back to that. So where's 419? All the way back here. Yeah. So SPY's not even back to those levels, and VXX or UVXY, I'm not even sure which one I just looked at, but that's already blowing past those. So it's doing even better as far as overperforming on the downside because of that double-edged. When the market goes up, it goes down. Even if the market goes nowhere, it goes down because of the negative drift. So just a quick example. I wanted to show you that looking at a test of a system, going back a long distance to identify the edge. During the systems testing workshops, we go through a process of actually optimizing signals and testing a lot of different indicators and time frames and risk controls and holding overnight versus not holding overnight. Lots of things like that. So I've already been through that process a little bit, and I just picked one out that was very simple. A few other things maybe look a little better than what I just showed you, but across the board, they're all pretty good on the short side because just the nature of that instrument. So hope you found this interesting. If you would like to get into detail about testing different indicators, setups, systems, edges, combining edges, offsetting different systems with hedged systems, etc., we get into all that information and all those different types of topics in the systems testing workshops. So feel free to check that out. It's a 1-month free trial for you to check that out. No risk. You can come to 2 sessions and see if it works for you. You can also actually during that period of time go back and watch the previous recordings as well. So you can see several of these workshops, get a lot of good information from it. And if it's something you think is valuable for your trading, you can continue on and keep coming to the future sessions as well. So hope to see you in the next one. I hope you enjoyed this video. If you have any questions, you can hit me up on Twitter @AndrewFaldy or email me afaldy@smbcap.com. Thanks a lot.